Ladies and gentlemen, welcome back to another video here at Intuition FX. I hope everyone's well. I hope everyone's had a great start to the new year. I hope everyone's, already getting to work, making sure that any goals you've set for the year, you're already working towards them because we do not have time to waste over here. A couple of changes are going to be happening to Intuition FX. I want to make sure this year goes structured. I want to make sure I get the best out of this year for Intuition FX, and I want you guys to get the best out of this year as well. So those things, announcements, changes will be towards the end of the video. For now, I'm going to get straight into the video. And firstly, before I do that, I just want to say thank you to everybody for showing so much support in 2023 and the last 3 videos that I posted, the lessons. I appreciate everyone's support, appreciate you guys watching, and the same will go for this video. I appreciate you guys watching, and I would appreciate it if you smash that subscribe button, like the video, and share it to anyone who you think will benefit from this. So I put a poll out saying, what video would you like me to do? Would you like me to do a video on one shot, one kill or day trading? Now, the majority was for day trading. However, I had countless DMs of people asking me, please make a video on one shot, one kill. So many people are talking about day trading. So many people are talking about scalping. Everyone's on a 1-minute time frame, but there's not enough people talking about one shot, one kill. So what I've decided to do as a bonus video, as a video to say thank you to everybody and to start the new year in such a great way, I've decided to put this video as a one shot, one kill plus a day trading video. It could be a hefty video. However, if you guys go back to a lot of my videos, a lot of my lectures, and a lot of my reviews, a lot of my weekly reviews that you guys are seeing on this channel, the weekly breakdowns, when I talk about higher time frame analysis, I do a lot of the talking there. So I'm not going to sit here and talk too much about higher time frame, only because, again, like I mentioned, I have done a lot of that. Sorry, I have done a lot of that throughout my weekly breakdowns when it comes to higher time frames. But I want to specifically break these videos down now to one shot, one kill and day trading, because I feel like for most of you out there who might have a job, who have things to do, families to feed, you've got children to look after, day trading may not be ideal. And that is completely understandable. Not everyone's got time to day trade. But one shot, one kill is a beautiful way to make money. It's one of those things where it will require a larger stop. Okay, so for any of you thinking that I'm going to teach you a strategy or go through a strategy that talks about a 10 pip stop and a 50 pip take profit on one shot, one kill, you might as well just go watch another video. Because a lot of the one shot, one kill trades I used to take, I would say sometimes I'd have like a 20 pip stop, 30 pip stop, and I'd go for like 1 to 2 RR. When it comes to one shot, one kill, I'm not happy with a 1 to 1 RR. I feel like I can do that as a day trader. I feel like for a one shot, one kill artist, I feel like at that point, if you're just doing a 1 to 1 RR, I want to say, I'm going to be careful how I say this, but I feel like it can be a waste of time, to wait a whole couple of days to a week just to make 1 R back. But again, like I said, I don't think it's a complete waste of time because 1% is better than 0%. And I feel like if you want to build consistency by doing a 1 to 1 RR, you got to start somewhere, right? We all start somewhere, ladies and gentlemen. No one's going to just jump straight into a 6R trade. Over the last, I'd say, year, you'll see that I would have taken some one shot, one kill trades. A lot of them result into like 70 pips, 80 pip trades, some of them 60 pip trades. Now, don't get me wrong, I wasn't making 10% on these trades. My stop losses were like 20 pips, maybe 30 pips. I was getting like a 1 to 2, maybe stretching it to a 1 to 3 time to time, right? But my main focus normally when it comes to one shot, one kill is like a 1 to 2 minimum. And anything, more than that, can't complain, right? You cannot complain if you're getting anything more than that. So I'm kind of going to go through the breakdown of how I go around one shot, one kill trades, and then I'm going to dive in a little bit deeper on how I go through my day trading. Now, this, like I said to you guys on the other videos that I've made on the SMT, the market maker Bansa models, and the psychology of numbers game, those are not just videos that I've just made, boom, done, and I'm never going to talk about things again. Those are videos I want to build on as I do more live trading sessions with you guys. When I record when I'm taking the trade and I do a voiceover of it and I'm doing everything in real time. I want to expand on the things I spoke about in those lessons in real time. I feel like that will help a lot of you, and it will, I mean, it will help me as well, right? Because when you're actually listening to yourself or recording yourself and you watch it back, you're analyzing yourself, you're self-reflecting, and I think that's very important. And I'm going to be doing a lot of that in 2024. There's going to be a lot of those live trading sessions. I'm going to try and cut down on just putting music on the background. I'm going to focus a lot on making sure I produce high quality content. Because like I said, I do have an announcement to make at the end of this video. So you are going to want to stay tuned, because this is going to be a very good opportunity for a lot of you who want to exceed in the trading scene. Now, when it comes to one shot, one kills, right? The first thing you need is a daily bias. Or no, sorry, not a daily bias. You need a weekly bias, okay? You need a weekly bias to say, this is where price is going to go, or this is where I think the weekly candle is going to look like. If you do not know what the weekly candle is going to look like, ladies and gentlemen, things will get tough, okay? You need to have some sort of anticipation. You need to have some sort of idea that, okay, this is where I think the week's gonna go, because what's gonna happen is we're gonna use the power of three concept on a weekly format, right? Now, what do I mean by that? Let's have a look. This weekly candle here, when it closed, okay, we closed as a down candle. Spoke about this about 100 times now. The next candle was this is a propulsion block, meaning the next candle is going to project to the upside, right? I've been saying this for a long time. Even when I was doing the weekly breakdowns, I was talking about this week being a very bullish week, and that is what we got. Now, as ICT said, again, guys, I did not invent these concepts. It was ICT concepts. I'm just trying to explain it in the way I understand it. And for you guys who think it's easy to understand it from me, thank you. If you think, you still want to go watch ICT videos, I recommend you do that. Just type it on YouTube, ICT, one shot, one kill. Again, everything's on this channel, okay? Now, I never focus on where we're going to open and close. I don't care about the open and close. What I mean by that, I care about the open just because I want to draw that price line out. I don't care where we close, okay? I just want to see where is the liquidity, okay? Which is this high over here. There, okay? So now, let's say we're doing a weekly analysis, right? This week's gone and it's Sunday the 10th of December. I'm sitting down thinking, okay, let's do my weekly analysis. And 1, 2, 3, 4 candles have not happened yet. This is the last candle. Next week, this is going to be the candle, right? I'll be sitting there saying to myself, right, what do I expect next week? And I would list down what I expect. Okay, I see a propulsion block. Okay, DXY is bearish. Euro USD is giving me a bullish stance. Okay, I have a propulsion block. What does this mean now? What does a propulsion block mean? What is my bias? Okay, what this is telling me is that next week's candle should be bullish. I want to see an extremely bullish candle. Now, how do I work with that information? I sit there and I say to myself, I am going to look for longs, right? Now, forget day trading for a second. Let's talk about one shot, one kill. The way you're going to go about this, ladies and gentlemen, there are so many ways to go about this, and this depends on your appetite for risk, and it depends on how much of a stop loss you can handle, how much RR you want, and it depends on you as a person. I have a couple of ways that I can do a one shot, one kill, and again, like I said, I'm not going to go in depth with everything, as I am going to build on these lessons, as I am going to be incorporating one shot, one kill in my trading in 2024. The whole idea of trading is eventually to become more hands-off than hands-on, right? Right now, we're day traders. We're on the charts pretty much Tuesday, Wednesday, Thursday, Friday. Mondays, I'm never on the charts. Friday sometimes, but Tuesday, Wednesday, Thursday, unless it's, a news, FOMC, CPI, NFP, all of those kind of things. We're pretty much down the charts, on the sessions, day trading, day trading, day trading, day trading. Doesn't mean every single day is a trading day, but again, we're there all the time. Eventually, the goal is to, 1 or 2 days, just take that trade and let it run, right? That's the goal, because you want to live your actual life while money is being made for you, right? And that's the long-term goal. So, back to the charts. So now we have that on a weekly format. I'll go back to the daily and I'll say to myself, okay, how have you closed on the daily? Remember, none of this has happened yet, okay? So I say, okay, we've closed as a down candle. We've closed as a down candle on a daily order block. This is very interesting, I'd say to myself. Weekly order block, daily order block, down candle. Fabulous. Now, Do I look at the 4 hour? Yes, I do. I'll look at the 4 hour and I say, okay, what can I see? Right? None of this has happened, by the way. I say, can't see much yet. 1 hour is the lowest I will go for a one shot, one kill. And this is where I'm going to tell you guys exactly how I go about one shot, one kills. Okay? First thing I do is I draw out the Sunday opening price. You take the opening price from Sunday as soon as it opens. Okay? And it's that 4 o'clock time over here. Well, it's not 4 o'clock. Sunday, sorry, here. There, 5. So opening price is this candle here. So I'll zoom in. Over here. The opening price at 07585. There. That's your Sunday opening price, okay? Why is this important? Because if you look at the concept of power of 3, if we, let's say we were day trading, you want daily opening price, you want price to go below it, then you want to go long. It's the same scenario on a 1 hour time frame. We've already come into this daily order block, right? What may I be looking over here? Remember the lesson I did on SMT, guys? Remember the lesson I did on that? What would I be looking for? I would be looking for SMT. I'd be thinking, okay, did DXY take out the high? Did GU take out this low? I would be looking for something, all right? Because there's a PD array here. Daily order block, weekly order block on EU. SMT will help highly to take these trades, okay? When you're taking a one shot, one kill trade, having SMT is just one of the biggest confluences you can have to be on the right side of the market and making sure you catch those big moves, making sure that you're not caught on the wrong side of the market, okay? So we have Sunday opening price. Now, what would I do as a one shot, one kill trader? Would I trade on a Monday? Yes, I would. Now, some of you are going to sit there and say, but you don't trade on a Monday. I don't day trade on a Monday. I let Monday pan out because, like I said, I don't want to occur so much drawdown. I want to wait for my Tuesday low of the week if it gives me that, or I might wait for a Wednesday. In this case, let me go through the first way you can trade, okay? If from the previous week, we've already come down on a PD array like we have over here, and your idea of price is, okay, we're going bullish, and you can see it is a market maker buy model over here. What you can essentially do is as soon as price trades below this low, below the opening price, you can go long. Your stop loss will be here, but 35 pip stop. Okay, safe stop loss. Again, check for SMT to make sure that isn't a good stop loss. And again, if you put your stop loss there, it's a logical place. It's a logical place to put your stop loss, ladies and gentlemen, because you're putting it in a place where you don't really want it to go low again. Look at like I said, I mentioned this in the previous week, or the week before that. Look at the way we reacted off that on a 1 hour time frame. It doesn't want people to get in. When you'll know when a bank or when the central banks are in a position and they're working on these levels, is because there'll be snappy movements. They'll be very snappy. You'll have no chance to get in. It's like FOMC. You have no chance to get in some of these moves. Boom, FOMC just goes. Because they don't want you to get in, because those are the monstrous moves they don't want you to catch, right? You can go long here with a 35 pip stop loss, and you can go for a take profit, complete that market maker buy mode at 260 pips. Now, some of you are going to look at me and say, this is unrealistic. Some of you are going to look at me and say, oh, this seems very easy. So a lot of you are going to find your own way of discrediting what you've seen, right? Now, let me explain the RR on this now. We had set a 35 pip stop loss, 260 pips trade divided by 35. It's a 1-to-7 RR. Now, are you going to get the full 7%? Absolutely not. Why is that? Because you are going to take partials. Okay? Now, when do we take partials? In my opinion, right, I have my stop loss here. We're consolidating. This is Tuesday. Tuesday's taking out this short-term high over here. I'll take something off, maybe 20%. Something small, because you got to look at narrative and you have to look at logic at the same time, okay? I would have sat there and I would have said to myself, FOMC is on a Wednesday. Everything's bullish. I'm not going to take a trade on Wednesday, but I've taken that trade on a Monday. We've broken, this high over here. Weekly order block, daily order block, SMT with DXY or GU. DXY is bearish. I want to hold this position. So what would I do? I'll tell you what I would do. I would take my partials here, okay? My stop loss, in all honesty, I would maybe move it below this low over here, or I would keep it there until FOMC passes, right? This is why partials is important. Then, once FOMC has its run over here, for example, boom. As soon as this candle's closed, as soon as the hourly candle is done, boom, I'm taking partials. And now, I might take like 20, 30% off. I might take I might now, at this rate, I might only have 50 to 40% of my position left. Okay? Now what would I do? My stop loss would be at more than break even. It would be under these lows over here. Okay, it wouldn't just be over here. It would be under like an FOMC low or these lows over here, because look at that expansion. I'm not expecting price to come all the way below now. I'm like, this is good. This is brilliant. Then, what would I do? In all honesty, there's two ways to go about this. When price gets all the way here, higher, 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 you have two options. A lot of people will take extra partials there, right? Because you can see it may reverse. Or, as price is reversing, you're saying, you might start getting wary, like, oh, wait, did we just reverse, or what's happened? You can take partials again. As it's dropping, just take another partials, maybe another 20%. Leave like 20% on for the remainder to hit your buy side. But the reason I'm using this example is because it's the most perfect example of FOMO, fear of missing out, and the greed element of things, okay? And as a professional trader, you need to understand when the market is retracing or when the market is reversing. Those are the two very important things, okay? Just give me, guys, sorry. Sorry, guys, just okay, so sorry about that, guys. Anyways, now, yes, you need to know the difference between reversal and retracement. Now, when I'm looking at a situation like this, when FOMC has had such a pump like that, and over here we have another opportunity to get in, a buy like that, I'm saying to myself, are we really going to shy away from taking this buy side by what? 7, 8 pips? Are we really going to shy away from 8 pips and absolutely just reverse and take out everything? I don't think so. That's when you have to start using a little bit of logic. That's when you got to start sitting there and you got to start saying to yourself, you know, how do I go about my risk management? Because it's very important. And this is like, I used to struggle with this a lot, right? Because price would get all the way up in here and it would start going down. I'll take out my whole position and price will hit my take profit. And I'm like, I just sit there and I'm like, what just happened? Right? What you want to do is you want to have faith in what. This is why the weekly candles are so important. And remember, I said to you, ladies and gentlemen, right? It's not important where we close. It's about where is the liquidity and where are we reaching to, okay? Because if you look over here, just drawing it out. There. This is 1 week's price action. And look, it's not until the next week Friday. Okay, obviously, because the holidays was a lot of consolidation, but next week Friday. So you would have been holding your position from Monday the 11th to Friday the 22nd. So 11 days, right? And you with partials probably would have made about 5%, I would say, 4 to 5%, right? Maybe more. But what if you took one trade like this a month? It sounds ludicrous. It sounds absolutely diabolical. It sounds like it's a dream. It sounds like it's easier than it is. Because you know what? I'll be honest with you. The only thing that's going to stop you from taking trades like this is not paying attention to the weekly time frame and it's not trusting your actual analysis. You're going to sit there, like most of you, I'll be completely honest, you'll see this wick over here. You'll see price reversing like that. Boom, you'll bail on your whole trade. You'll say, no, it's bearish. And then what will price do? Boom, price will just continue going higher and it will annoy you. And this is why I say to a lot of people, sometimes it's best to just be stopped out. instead of taking your position out. Sometimes just put your stop loss in that perfect place you want to put it, put your take profit where it needs to be, and just let it ride out. Let price do what it needs to do. Don't move your stop loss too quickly, especially on these one shot, one kill trades. Like these one shot, one kill trades will do you best when there's news events. Like, when I say NFP, if you've taken the trade on a Tuesday, you can hold it through NFP. Okay, just don't trade after Wednesday for NFP. Right. Same with FOMC. Don't trade the day of FOMC. Okay, trade the day before that or the day before that. That's fine. Same with CPI. Don't trade. Like, I've traded the London of CPI and I've held my position as a one shot, one kill. But don't trade New York CPI. You know, this is the perfect example. You take that trade on a Monday, Tuesday has news release, Wednesday has FOMC, Thursday just goes higher. Like, you have to be able to just hold these positions. Okay? Now, let's focus on this week over here. Because I'm gonna what I'm gonna do is I'm gonna talk about day trading in a moment once I finish with one shot, one kill. This is the most simplest way of taking a one shot, one kill trade. I'm gonna be completely honest with everybody here. And depending on how many pairs you're looking for, you can catch these at least once a month. And guys, look at what I've told you. There's possibilities of making 4 or 5%. Now, I'm not saying you need to aim for that. I'm not saying you need to always make those big returns, because I think that is quite a high return to make sometimes. But what if you had 200k accounts or 400k funded accounts and you just made 3% maybe a month? A lot of you, and I say this because I did this to myself a lot, okay? A lot of you are stopping your own progress because you're chasing high return. You don't need to chase high return. You just need to make sure you get more funded accounts. That is how you're going to make a lot of money in this place. That is how you're going to make a lot of money in this marketplace, okay? If you've got a 100k account and you make 3% on a trade, that's 3 grand. If you did it on a 200k account, you've made 6 grand. You guys get the point, right? You just go higher and higher and higher. If you made 3% of 400,000, you made 12,000. So even if you were to, for the rest of your entire life, just make 2% a month and leave it there, but increase your capital, you could do a lot of damage. You can make a lot of money. It's not about high returns. Why do you think a lot of these funds out there are making about 18% a year, between 18 to 25, if that? Because the capital they're trading on, it is giving them a lot of money a year. Billions. This is the thing you guys need to understand. It's very easy on social media for people to say, I made 6% on this trade, I made 6% a month on a 100k account. That's brilliant. But do that same 6% on 400k then. Can you do it consistently? Can you do it without stressing your whole life out? Imagine, guys, again, imagine taking trades like this 2-3 times a month, even twice a month. Isn't the goal to accumulate stupid amounts of money? Imagine making $10,000 for you guys in America, or you guys in the UK, £10,000 a month, taking 2-3 trades a month. I know it sounds like I'm selling you a dream. I'm not doing that. I'm not saying every single one of you are going to understand this. I'm not saying it's so easy. You need to understand the concepts. You need to understand the weekly bias, the monthly bias. What is next week going to look like? You need to develop that mindset of, this is where I'm going to put my stop loss, boom, I'm going to let it go. Once you develop that, that is when you're going to improve. That's when you're going to keep on getting better as a trader. And that is something you guys need to focus on. For you one shot, one kill artists, that's what you want to do, this is the beginning. And like I said to you, these are the videos I am going to expand on. These are the videos that what I've said now, I will expand on it. I will make sure I expand on it as the weeks go by, as the days go by, because I'm going to show it in real time. Now, let's say that's the whole week, for example, right? That's the week. Now, what's next? What comes after that? Now we got to change this and change it to day trading. We'll change it to blue. Yeah, blue is fine. Let's copy that. Sorry, guys. Oh, okay, no. Control C, Control V. That did not work. Okay, there we go. Right? It looks messy. It looks messy. I know. It looks messy. Now we start going into the 15-minute time frame. Now we start diving in. So we say to ourselves, okay, what have we got in our minds here? We've got the Sunday open. We've gone below it Monday. Do I trade on a Monday? Absolutely not, unless it was a one shot, one kill. Okay. Tuesday, am I going to take a trade? Here's the daily open. Price goes above it, below it. Could have found a sell model, I'll be honest, but no. Wednesday, are we going to trade out all? Absolutely not, because it's FOMC. So when does your trading day come? It comes on a Thursday. You would have had to wait. If you're a day, again, this is from a day trader's perspective now. So for you guys that wanted the one shot, one kill, that's how you would have done it. You would have taken that one shot, one kill, gone higher, and just you would have let it just ride out. That's what you would have done. Okay. For us day traders, we got to be a bit more slower than that. To the extent that Monday I don't trade, Tuesday I need some sort of bullish, idea to trade off. Wednesday FOMC I'm not going to trade. Boom. Thursdays where we get that. This is a 1 hour order block on the Thursday, and this should be another 1 hour order block. There we go. Over here, and this was a trade I actually showed you guys on the YouTube. And I think this was the last trade I took for the year. I think it was. Yeah, I think it was. Anyways, that is what we have there. So look on Thursday, right? Let's get rid of this. Thursday. What happens on Thursday? Let us take the daily opening price. Actually, let's take that all the way across. Boom. Daily opening price. Right? Now, what happens in the London session? We make the low of the day. Why did London make the low of the day? Because it came into a PD array. It's that simple. I am someone who, if I think London's going to make the low or high of the day, in this scenario, low of the day, there needs to be a reason. Why is it making the low of the day? What is it coming into? What PD array is it coming into? Is it coming to an order block? Is it coming to a fair value gap? Is it coming to a breaker block? Is it taking out an old low? Like, what is it actually coming into? And as you can see, this is the 1 hour order block. What happens here? Boom. Price goes higher. We create another 1 hour order block, which you could have taken when? In New York. So you have two scenarios here. We have the order block in London session that you could have traded off from here, from the previous day. Or there's another 1 hour order block that you could have traded in New York. Now, I'm not going to go down into the 5-minute time frame because I did this for you guys on another lesson. So I want you guys to go back and watch those. But this is how I break down my whole trade idea. Now, to a lot of you, you might sit there and say, is that it? A lot of you might sit there and say, I thought you were going to do a full breakdown. This is my full breakdown. A lot of you overcomplicate your trading, and I was that exact person. A lot of you overcomplicate everything. This is how simple it should be. If you cannot see something as this simple in the marketplace as a beginning trader or someone who's just come into the market, forget it. Don't take the trade. If it's not this clear, don't take it. When you become more advanced, when you can start trading the 1 minute, the 5 minute, when you can counter trend trade, when you can do all of these kind of things, yes, you can take more complicated trades. You can do a lot more with the markets, okay? But if this was the only... okay, let's put it this way. As a day trader, if this was the only trade you took in the week, you would not be complaining. If this was the only trade you took as a one-shot, one-kill trader that I showed before, you would not be complaining. It's just about waiting. It's just about playing that waiting game. It's just about waiting to see that, am I seeing everything that I want? Are all the PD arrays lining up? Again, how did we come to this conclusion of taking a buy on a Thursday? How did we get to that? we got to that by looking at the weekly. We started this all got created from the weekly time frame. That's where it all started from. We looked at the weekly. We said, this is what I think the weekly time frame's gonna do. Okay, cool. Went on the 1 hour, one shot, one kill. This is what I'm gonna do. This is my stop loss. This is my take profit. Boom, done. I'm gonna let the trade go. Okay, I don't want a one shot, one kill. I want a day trade. Fine. Monday, I don't trade. Tuesday, is there anything to trade off from? No. Wednesday is FOMC. You should not be trading. Thursday, can I see a PDRA to trade off from? Absolutely. So Thursday is your high probability day. Sometimes you have to wait till Thursday, and even so, sometimes you have to wait till Friday. But you need to have that patience, and sometimes, ladies and gentlemen, you'll go the whole week without a single trade. Especially if you stick on the 15-minute. If you don't, if you just say to yourself, forget the 5-minute, the 15 minutes the lowest I want to go, then you can do that. Again, you take your trade here as it comes on here, the 1 hour order block. Here, put like a 25 pip stop loss. How much R do you want? You want 1 R? Here you go. Go above the Asian high. There's your 1 R. You want 2 R? Here you go. Here's your 2 R. Around here. How can you get a higher R on this? Easy. There was a news event at 8:30. And there was an order block. So you could have gone break even, taken your partials above over here on Asian high, gone break even, and let it run. And you could have taken more partials. And then eventually you would have got stopped out at break even, but you would have taken partials. Or you could just say to yourself, I'm happy with 1 R. I'm happy with 2 R. Okay, maybe I'll stretch it to 3 R. Now the news is done. If we're coming to London close, let me close my position. As a day trader, I should be out by 12 o'clock noon. So 12 o'clock noon, let's close my trade around this time over here. So what RR would you have got? 25 pips stop for about 100 pips. Can you complain? You can't complain. This is as simple as I can break it down to you guys. Because this is basically what I'm trying to say is you may not see a week like this every single week. Like I said, sometimes you wait till Friday to take a trade. Sometimes you're done by Tuesday. Sometimes the whole week you see nothing, so you have to wait till the next week. And that's the reality, guys. But like I said, look, this isn't the end of it. I am going to build on this for you guys. I am most definitely going to build on this lesson because I'm going to be taking trades like this throughout the year. I'm going to be showcasing them. And I'm going to be doing live commentaries. And the live commentaries are going to be broken down to this level. And I will be incorporating the 1-minute time frames and the 5-minute time frames. So you will see a lot of that. A lot of that. Now, before I go, come to the announcement. Now, a lot of you guys know I've offered one-to-one calls, which I was happy to do. Now, I've been mentoring somebody for about, well, a couple of people that are close to me that I know for about 6 months now. And you'll see I've been posting one of his results on the Telegram. You know, he's already making 2% a week and he's doing great. Going forward, with the one-to-one calls, I may be leaving them after January. And I will be taking on a couple of students, you know, maybe 5 or 10 students for about 3 months. So every 3 months, I'll open up, you know, a space again for people to come in and teach. And it's a mentorship basically, but not a place where you can join whenever you want. You know, if you guys are interested in that, again, I'm still thinking about it. I'm still thinking whether I want to devote my time to that. If you guys are interested, please send me a DM. Obviously, there will be a price to it. But again, it will be a full 3-month dedication. It will not be a random Discord where everyone can just come in at random places. It will be a full one-to-one with you, with a group of about 5 to 10 people. So I can really hone in and focus on you as individuals, because with this individual that I have been mentoring for 6 months, again, his results are phenomenal, and it is all over my Telegram and my Instagram for you guys to see. And it is something I want to provide to more people, but again, limited spaces. So it will be on a first come, first served basis. So if anyone is interested, please do reach out to me about that. Other than that, I hope you guys have a fantastic weekend. Take care of yourselves, guys, and the weekly breakdowns will start next week, and we are going to kill this trading year. Until then, take care, guys. Peace.